Another day of trading is over at the New York Stock Exchange. The Dow ended the trading day up more than 300 points.
The S&P and NASDAQ also saw some healthy gains. Both are up by about 1.5%. Marley Kayden joins us now. She is an economic journalist and professor at DePaul University. Marley, welcome. So what was driving the markets today?
We saw a really nice rally today. We had a couple drivers behind it. The travel sector was a big driver today. We saw some really good earnings report, particularly from a cloud company called Snowflake. They jumped 20% at one point. And also we saw a revision of our GDP that painted a slightly better picture of the economy than we saw with the first estimate. So all of those things were drivers, as well as some optimism going into tomorrow's Fed announcement from Fed Chair Jerome Powell. I think the markets are thinking they know what to expect, or hoping they know what to expect, at least out of that announcement.
On that note, Marley, investors are looking ahead to the Federal Reserve Chair Jerome Powell's address tomorrow at the Jackson Hole Economic Symposium in Wyoming. This comes ahead of the Fed meetings in September on a possible rate hike. What are you expecting we'll hear from the Fed chair tomorrow?
I think tomorrow, the expectation is more looking for a tone than any concrete information. There's no consensus that Jerome Powell is going to come out and say, this is what the hike will be. I don't think that will happen. I don't think anyone on the street thinks that will happen. What I think people are looking for is some guidance or some insight into how effective they think the aggressive rate hikes have been thus far, and how much that will impact the coming ones in September. Consensus is calling likely for a 50 basis point hike to a 75 basis point hike, which is what we've seen in the last two. But depending on which way it goes, we could see a very strong reaction either in the negative or the positive, depending on the tone, the entirety of the tone of what Jerome Powell has to say.
Yeah, well, for months, the Fed has tried to balance raising interest rates without throwing the economy into a recession. What's your sense of the Fed's inflation strategy so far, and how would another rate hike impact consumers?
Sure, and that is such a tough question. We are in uncharted territory here. The Fed has very little historical data to draw from in making these decisions. We have an ongoing war. We're coming out of a pandemic. We have a supply chain crisis. There's so many things at play here. And the only tool, one of the only tools they have to fight inflation, is to raise interest rates. But like you said, it's a delicate balance. We have to raise them, but not too fast and not too aggressively as to push the economy into a recession. So they've tried to do that sort of gradually. We started in March with 25 basis points. Then in May, we went to 50. The last two rate hikes have been 75 basis points. The question now is that enough? Will we stay at 75? Did it do its job and we can go back a little bit? 50 is still an aggressive number, 50 basis points. Or is there a possibility that they go up to 100 basis points? That's an unlikely scenario, but as it is uncharted times, this is always a possibility that they become more aggressive in their approach, because prices are going higher and higher, and it's impacting Americans in such a big way. But so do these rate hikes. As these rate hikes come and they go up a seemingly small amount, that impacts anyone who's trying to borrow money or has already borrowed money and has debt. That's people buying homes. That's people currently holding adjustable rate mortgages. That's the interest payment on your credit card debt, on your auto loan, on your student loans. And these are not seemingly large numbers, 25 basis points, but it can be the difference of hundreds or thousands of dollars coming out of Americans' wallets.
That's a lot of money. Marley Kayden, thanks for your insight. Thanks for joining us.